A farmer in Vietnam sells rice to a buyer in Egypt. Neither of them are American. The rice never touches U.S. soil, but the transaction happens in dollars. A German company buys oil from Saudi Arabia, pays in dollars. A Japanese investor buys Brazilian bonds, priced in dollars. The currency of one country has somehow become the currency of everyone, and it didn't happen by accident. It happened because of a meeting in a hotel, a war, and a deal with the country that has the oil. This is the story of how America convinced the world to use its money, and why that might be the most valuable trick anyone's ever pulled. Let's start with a number: 60%. That's how much of the world's foreign exchange reserves are held in US dollars. Not euros, not yen, not yuan. Dollars. 88% of all foreign exchange transactions involve the dollar on one side. When countries trade with each other, they convert to dollars first, even when America isn't involved. The dollar is the world's reserve currency, which sounds boring until you realize what it actually means. It means America can print money and the whole world has to accept it. It means American banks control the plumbing of global finance. It means if America wants to punish a country, it just cuts them off from dollars and watches their economy collapse. That's not economic policy, that's power. So how did we get here? How did one country's paper become everyone's money? The answer involves a war, a hotel in New Hampshire, and the most lopsided deal in financial history. Rewind to 1944. World War II is still raging, but everyone knows the Allies are going to win. The question is, what happens after? The last time there was a major war, the global economy collapsed. Countries devalued their currencies, trade died, the Great Depression happened. Nobody wanted that again. So in July 1944, delegates from 44 countries meet at the Mount Washington Hotel in Bretton Woods, New Hampshire. Their job? Redesign the global financial system. Britain wants the pound to remain the world's currency like it was before the war. Makes sense. They're still an empire, still have colonies, still have influence. But there's a problem. Britain is broke. They've been fighting Germany for 5 years. Their economy is destroyed. Their gold reserves are gone. They owe America billions. America shows up to Bretton Woods with a different proposal, a simple one, brutal in its elegance. Every currency will be pegged to the dollar, and the dollar will be pegged to gold. $35 per ounce, fixed, guaranteed. Any country can exchange dollars for gold at the US Treasury. The dollar becomes as good as gold, better actually, because you can't easily ship gold across oceans, but you can wire dollars instantly. Britain fights this, proposes alternatives, loses, because America has one argument nobody can counter. We have all the gold. At the end of World War II, the U.S. holds roughly 2/3 of the world's monetary gold. Fort Knox is full. Everyone else is empty. If you want gold, you need to trade with America, and America only accepts one currency for gold, dollars. Bretton Woods passes. The dollar becomes the anchor of the global system, not through conquest, through leverage. Here's how it worked in practice. Say you're France in 1950. You want to buy oil from Saudi Arabia. Saudi wants gold. You don't have gold. You have francs. So you do this. Convert your francs to dollars. Use dollars to buy the oil. Saudi takes those dollars and either uses them to buy American goods or converts them to gold at the US Treasury. The dollar becomes the middleman in every transaction, and America becomes the bank the world has to use. This created something economists call exorbitant privilege. America could print dollars, buy foreign goods, and foreign countries would accept those dollars because they could always trade them for gold. It was the greatest arbitrage in history. Print paper, get real stuff, as long as the gold peg held. Except there was a math problem nobody wanted to talk about. By the 1960s, America was running deficits. The Vietnam War was expensive. Social programs were expensive. The government was spending more than it took in, so it printed more dollars. Foreign countries started noticing. They had piles of dollars. They started doing the math. America had printed way more dollars than it had gold to back them. If everyone showed up at once and asked for gold, America couldn't deliver. France figured this out first. In 1965, French President Charles de Gaulle publicly called America's bluff, started converting dollars to gold, shipped it back to France in warships. Other countries followed. America's gold reserves started draining. By 1971, the situation was critical. President Nixon had a choice: honor the gold peg and run out of gold, or break the promise. August 15, 1971, Nixon goes on television, announces the U.S. is temporarily suspending the convertibility of dollars into gold. The Bretton Woods system is dead. Everyone expects the dollar to collapse. If it's not backed by gold, why would anyone use it? But something weird happens. The dollar doesn't collapse, it gets stronger. Because by 1971, the global economy was so intertwined with the dollar that nobody could afford to stop using it. All the contracts, all the debts, all the trade relationships, all denominated in dollars. Switching would be chaos, so countries kept using dollars, even though they weren't backed by anything except America's promise to accept them for taxes and debts. The dollar had become too big to fail. But America didn't leave it to chance. They made a deal, the most important deal in modern finance, and most people have never heard of it. 1974, U.S. Treasury Secretary William Simon flies to Saudi Arabia, meets with the royal family, makes an offer. America will buy Saudi oil, protect Saudi Arabia militarily, sell them weapons. In return, Saudi Arabia will price oil in dollars, only dollars, and they'll convince OPEC, the oil cartel, to do the same. Saudi agrees, OPEC follows, and overnight the dollar gets a new backing, not gold, oil. If you want oil, you need dollars, and everyone needs oil. It powers cars, planes, factories, militaries. Oil is the input for modern civilization. This becomes known as the petrodollar system. Countries have to hold dollar reserves to buy oil, which means they have to buy U.S. Treasury bonds to store those reserves, which means they're lending money to America at low interest rates. America gets to borrow cheaply, print money, run deficits, because the whole world needs dollars to buy oil. It's Bretton Woods 2.0, except instead of gold backing the dollar, it's oil. And instead of a promise to convert, it's a geopolitical arrangement enforced by aircraft carriers. Let's zoom out to what this actually means. When America prints money, it's not just inflating the U.S. economy, it's taxing the entire world. Here's how it works. Say the Federal Reserve prints $1 trillion. That increases the global supply of dollars, which means every existing dollar is worth slightly less. Everyone holding dollars, foreign governments, central banks, companies, individuals, just got diluted. It's like owning shares in a company, and the company issues more shares without asking you. Your percentage goes down, your value goes down, but you can't do anything about it because you need dollars to trade, to buy oil, to settle international debts. You're locked into a system where America controls the printing press. This is why countries hold treasury bonds, not because they're great investments. U.S. treasuries barely beat inflation. They hold them because they need dollar reserves, and treasuries are the safest way to store dollars while earning something. China holds over $1 trillion in U.S. debt. Japan holds another trillion. They're not doing America a favor. They're trapped in a system where they have to hold dollars to participate in global trade. And America knows this, which is why the U.S. can run deficits that would destroy any other country. When Argentina prints too much money, hyperinflation. When America prints money, the world absorbs it. But here's where the cracks start showing. The petrodollar system requires everyone to keep playing along, and lately some countries are getting tired of the game. Russia started selling oil in rubles and yuan. China is pushing the yuan for trade settlement. Saudi Arabia is talking about accepting other currencies for oil. The BRICS nations, Brazil, Russia, India, China, South Africa, are discussing an alternative reserve currency. None of this has broken the dollar's dominance yet, but the fact that it's being discussed is significant because the dollar's power isn't military or economic, it's psychological. It's valuable because everyone agrees it's valuable. The moment that consensus cracks, the advantage disappears. And America's actions are accelerating this. Every time the US uses the dollar as a weapon, sanctioning Russia, freezing assets, cutting countries off from SWIFT, it reminds everyone that dollar dominance is not neutral, it's a tool of American policy, which makes holding dollars a risk, not an economic risk, a political one. Here's the uncomfortable question. What happens if the dollar loses reserve status? America would have to actually pay for its deficits. Interest rates would spike. Borrowing would get expensive. The government couldn't print money to solve problems. The trade deficit would matter. Living standards would drop. It wouldn't be apocalyptic. America is still the largest economy, still has the most advanced military, still has Silicon Valley and Hollywood and the best universities. But the free ride would be over. The exorbitant privilege would end. And here's the irony. The very actions America takes to maintain dollar dominance, sanctions, financial warfare, monetary expansion, are the things pushing countries to find alternatives. It's a trap. Use the power, lose the power. Don't use the power, watch influence fade anyway. So where does this go? 3 possibilities. 1. Status quo continues. Countries complain but keep using dollars because there's no viable alternative. The euro is fragmented, the yuan isn't freely convertible, Bitcoin is too volatile. The dollar wins by default. 2. Slow decline. Over decades, the dollar's share of reserves drops from 60% to 40%, then 30%. Trade increasingly happens in other currencies. America remains important, but not dominant. 3. Rapid collapse. A crisis triggers mass dollar dumping, hyperinflation, global chaos. Unlikely, but not impossible. Most experts bet on scenario 1 or 2, slow decline or continued dominance. But here's what nobody's pricing in: technology. Central bank digital currencies are coming. China already has one. Europe is developing one. Digital currencies make it easier to bypass the dollar, settle trades directly, no need for dollar intermediation. If countries can trade directly in digital yuan or digital euros, the dollar's role as middleman disappears, and with it, a chunk of America's power. So let's bring this full circle. That farmer in Vietnam selling rice to Egypt, that transaction in dollars. It's not happening because dollars are the best currency. It's happening because in 1944, America had the gold. In 1974, America made a deal with Saudi Arabia. And for 50 years, inertia has kept the system going. But inertia isn't strategy, and legacy systems eventually get disrupted. The dollar's dominance has given America power no empire in history has had. The ability to tax the world through inflation, the ability to borrow indefinitely, the ability to enforce policy through financial exclusion. It's the most valuable privilege in geopolitics, and it's built entirely on trust. The trust that America will remain stable, that the dollar will hold value, that the system will continue. Trust is funny though. It takes decades to build, and it can disappear overnight. So here's the question nobody's answering. Is the dollar's reserve status permanent or temporary? A feature of American power or a historical accident that's running out of momentum? America acts like it's permanent, prints money freely, weaponizes finance confidently, assumes the world has no choice. But every empire in history thought their dominance was permanent, right up until it wasn't. The dollar is still the world's money, for now. But for now is doing a lot of work in that sentence. And the countries quietly building alternatives, They are not betting on forever. Neither should you.